No, admit.
So we wait for some 2-3 minutes more, and then
Yeah. 4 minutes we will
7
wait.
five.
Yeah, and then I'll start.
Yes.
ठीक आहे मग काय झालं? हे तर सगळं व्यवस्थित आहे. आता इथं नव्हतं. आलो. एक म्हणून जातं कधी कधी. Yeah. Okay. So today we start from joint product cost and byproduct cost. So joint product cost is basically if we manufacture a product A, product B, okay. So it is basically the same process we need to follow, okay. This is the point of separation. Point of separation where you need to like apply additional processes so that like I mean if you follow the same process you will get the product X and then you apply the separate process. With this you can get the product A or product B, okay. So this is basically the joint product. I mean whatever the cost you are incurring for manufacturing product X, this is basically the joint cost. And the additional cost incurred cost incurred, okay, for manufacturing product A is a separation cost. And for manufactured product B, this is again the separation cost. Okay. So up to certain level where you are not going to bifurcate the product. Okay. This is your joint cost. Once you start to bifurcate, then it is basically the separable cost. Separable cost for one product and separable cost for another product. Okay. So that is basically the joint product cost. Okay. Byproduct is basically my intention is not to produce the byproduct. Okay. I want to produce product A. Okay. But I'm getting, after completion of the product, there is a certain scrap. Okay. And like if I sell it, then I'm able to get some revenue. So that is basically the byproduct. Means my intention is not to produce product B here. Okay, that is not my intention. Okay, but I'm getting some, I'm getting the product B in the form of scrap and which carries the commercial value. Okay, so why we consider the joint product separately and the byproduct separately, that also you need to understand. Whatever may be the cost incurred for a joint product, okay, that you need to consider as a separate revenue, a separate cost. Okay, I'll explain. Okay, say for this is raw material. Okay, one process you are going to apply. For that you incurred the cost incurred. It is joint cost. Okay, then you apply, say for the 5,000 ton joint cost you got, production you got, that you apply 3,000 ton here and the 2,000 ton here and did the separate processes. Okay. And then you manufacture here the product X, then you manufacture product A, and here you manufacture product B. Okay. So here what you are going to do, you are calculating the cost for product A. Okay, this is basically the joint cost share plus separable cost of product A. Product A. Okay, and the same way cost of product B, sorry, A, same way cost of product B is basically the share of joint cost plus separable cost of product B. Product B. Clear? Okay, so that happened in a joint costing. Okay, in byproduct, what happened? Whatever may be, say for the main product is A, and the byproduct is B. So here there is no separable cost because it is, we receive as it is. Okay, so no separable cost. Okay, and whatever may be the revenue generation because of B, that amount we are not showing as a separate revenue or consider as a separate revenue. Means in financials we need to show as a separate revenue, but we are not going to consider. We are reducing from cost of production of the A amount from cost of production of A. Production of A. Okay, so this is the case. So in joint cost, what happened? We are calculating the cost of production for both the product. In buy product, what happened? We are reducing whatever the amount received by selling a product B or the buy product, that amount we consider as a recovery from the cost of production A. So we are calculating only for the cost of production, cost of primary product in case of the buy product. Okay, so we can see the terminology. Joint product are two or more product that are generated from the common input. Byproduct are minor product of relatively small value that incidentally result from the manufacture of the main product. So our intention is not to produce the byproduct. Okay, so it is basically the some scrap arises, okay, and that carries the commercial value. Okay, split of point. So split of point is basically means, if you see here, this is basically the split of point, where we start to incur a separate dedicated cost for separate product. That is basically split of point. Okay, joint product cost or joint product cost are cost incurred in producing product up to the split of point. Okay, so whatever the cost we incurred, this is basically the total cost, joint cost share plus the, okay, joint cost is basically up to the cost incurred here till X, means before split of point. And the separable cost are cost incurred on a product after the split of time. These are basically the separable cost. These are separable cost. Okay, so whatever the cost incurred after split of time up to the final production of the product, okay, that is basically the separable cost. So we can see the example. A simple manufacturing company produces two product A and product B. Direct cost associated with the manufacturing product A and B were 25,000 and 50,000 respectively. Okay, what is the meaning of direct cost associated with manufacturing product A and product B were 25,000 and 50,000 respectively? That means it is a separable cost. Okay, with the joint cost production representing $10,000. In order to allocate joint cost, its company used the proportionate gallon production of its two product as follows. So what happened? Joint cost which is $10,000, okay, which we need to bifurcate in like product A and product B, 1:2 ratio. So in 10,000, it is okay, 1/3 and 2/3. So you can consider the 1/3, 2/3 multiplied by 10,000 multiplied by 10,000. Okay, and then separable cost is given. So we can calculate separable cost is like 25,000 and 50,000. So here like 1/3 of like I can consider 3,333.33 and the 6,666.66, and then we need to make a total. Let's see. Yeah, so it is 10,000. Okay, and then you need to add. Okay, so this 10,000 is joint cost. Okay, which we need to apportion on product A and product B on the basis of their volume, which is 10,000 for product A and 20,000 for product B. Okay, so it is roughly around 1:3 plus 2:3. So 1:3 multiplied by 10,000, 2:3 multiplied by 10,000. This is basically the allocation of joint cost. Clear? And then we need to add 25,000 and 50,000, whatever may be. These are basically the separable cost because it is dedicated for a particular product. So these are separable cost. Okay, and then whatever may be the total. So this is 25 plus 3. It is basically the 28,333.33. And here 56,666.67 maybe. Okay, so if you can see, yeah, 28,333 and the 56,667. Okay, Then a relative net realizable value at split of point. So net realizable value equals sales value less cost of completion and disposal. So relative sales value at split of point is used purely for inventory costing and is of little use for the cost planning and the control process. Okay. So what happened at split of point? I tell you something. That's how we need to consider relative net split of point. Means if I cannot bifurcate the joint cost on the basis of like the production, okay, then I need to consider the relative net realizable value. Okay. So what happened here? Like say for end product, sale value of end product, okay, which is basically here 10 and here 20. Okay. Separable cost, maybe here 3 and here 5. Okay. So what is the net realizable value as split of point? 10 minus 3, 7, 20 minus 5, 15. Okay. So that you need to consider. Okay. Cost of completion and disposal. Here separable cost means disposal and everything covered here. So net realizable value at split of point is 7 and 15. Okay. So that would be the ratio we need to consider for allocation of the total cost. Total joint cost, sorry. Okay, that is basically the net realizable value at split of point concept. Clear? Any doubt here? We need to consider the end sale value and then we need to deduct separable cost plus disposal cost. Okay, so this is basically the input value at split off. Sorry, net realizable value you need to consider. Okay, so whatever may be the cost incurred till split off, okay, that we need to bifurcate on net realizable value 7 and 15. Okay, sell price quotation available at split off. Say for at split off, okay, like product X is a common joint common product. Okay, and if we know the sell price at this level only, okay, so the relative sell value at split off point can be used to allocate the joint cost if sell price quotation are known. Okay, say for we produce 10,000 quantity and we need to bifurcate A and B. Okay, and we know even though if we are not processed this 10,000 quantity I can sell at a $5 per unit. Okay, I need here 7,000. I need here 3,000. So I can apply the 5 and 5. That would be my cost. Okay. This is 10,000, 10,000, yeah, 10,000 is my cost. 10,000 quantity and that I can sell at a 5. So I can apply this. Means whatever maybe the cost arises. Okay. Yeah, 10,000 is a cost and then, no, not like this. Just a minute. 10,000 is my quantity. Okay. The cost incurred is 7,000. Okay. And the $5 is my end value. Okay. And if I required 4,000 for product A, 4,000, 7,000 quantity, this 10,000, and for product B, it is 3,000. Okay. So my ratio is basically I need to multiply both 35,000 and here 15,000. So roughly 35 is to 15. Okay. So 7,000 cost which I incurred. See, this is my cost 7,000. Okay. That I need to apportion in product A and B in the ratio of 35 is to 15. Means 7,000 multiplied by 35 divided by 50 is basically product A cost. And the 7,000 multiplied by 15 divided by 50. This is my product B cost. Okay. So that is basically the sell price quotation available. Okay. See what I mean, just consider the cost is 7,000. This is my joint cost. I need to allocate this cost in between product A and product B. that I can allocate on the basis of sell price quotation available at split off. 10,000 quantity produced, which I need to allocate in product A and B in the ratio of 7,000 and 3,000. So I cannot, because I'm using the sell price quotation, so I cannot allocate 7,000 cost in the ratio of 7:3. First, I need to calculate 35 in 15, and then I need to apply like this. Okay. So
Sir, I have a doubt.
yes.
So what if the cost of product A and product B after split off is different? Is
Yes.
it the same way to calculate?
Yeah. No.
Okay, sir.
Yeah, it is different because then separable cost added for final. Here also separable
No,
cost.
sir. You told $5.
Huh?
You told me, sir, that $5, if it's different for product A and then product B, will the calculation be the same?
$5 is basically this is basically like, see, it is basically the product X, if I consider, means the at joint level, and then it is bifurcated. So cost sale value of the product X is 5,000, $5.
Oh.
Okay. So
So
what
it's
I'm do,
not of product A and product B, it's of product X.
it is the, yeah, it is the sell price of the product X. Correct.
Okay, sir. Got it.
Okay. So this way we can allocate on sell price quotation available at split off. So we can consider this as an example. So first one is relative sales value, means end sales value. So Brown company produces two product A and B. Joint production cost incurred in the production A and B total 1,000. So joint cost for A and B together 1,000. Okay, at split off point, 100 unit of A had a sales value of 20 unit and 400 unit of B had a sales value of 15 unit. Okay. This is my joint cost. A and B. The quantity is basically 100. This is the quantity, and 100, and at split off point 100 unit of product A, 100, and B is basically 400 unit. Okay, and here actually there is a different sell price at split off point. Okay, has a sales value at $20, and B has a sales unit of $15. Okay, so like it is 2,000 and 6,000. So we need to bifurcate in the ratio of 2:6 joint cost. So whatever may be the 1,000 cost, we need to divide in 1:3. So that is basically the 250 and 750. Okay, like this is my ratio, 2:6 equals to 1:3. The cost is 1,000. Okay, so for product A, it is 250, like 1,000 multiplied by 1 by 4 and 1,000 multiplied by 3 by 4, like this. So it is 250 and it is 750. Generally, see, keep in mind, practically the sale value at split off is same. Okay, because we have not incurred the separable cost. But if here, like if someone is buying for a product A and then there is a separate market price available, and someone is buying for a product B and there is a separate market price available, then we need to do like this. Okay, but whatever the sell price available at split off, that you need to multiply with the quantity. Okay, and then whatever may be the amount arises, in that ratio you need to bifurcate the joint cost. If sales value not available at split off, then the final selling price minus identifiable cost incurred after split off. So it is basically whatever may be the final selling price minus separable cost minus disposal cost. So here they gave an example. So Smith company produces two joint product F and G. Joint product cost for October were 30,000. Okay, so joint cost is 30,000. Okay, and at any cost, whatever may be the joint cost allocated to product A and B, that cannot be more or less, means whatever may be the total cost. So that also you need to keep in mind. So during October, further processing cost beyond the split of point separable cost needed to convert the product into sellable form were 16,000 and 24,000. So here, sorry, FNG, separable cost, which is 16,000 and 24,000, 16,000 and 24,000. These are separable cost. And the unit is 1600 and 800 unit. 1600 and 800 unit. So 800. Okay. So here if you see, means either you can convert in a 1 unit or in full value. So if I convert the per unit cost, so it is basically 10 and here 30. Okay, per unit separable cost. Okay. F sell as 25 per unit and G sell at 50. Okay, so if I reduce, this is the sell value. So this is basically 25 minus 10, it is 50 and 20. So this we need to consider, and then we multiply with the value, means quantity. 15 multiplied by 1600 and 800. Okay, so so 24 is to 16, that means 3 is to 2. That would be my ratio. 30,000 we need to 18,000 and 12,000. That would be my joint cost. Yeah, 18,000. Okay. Are you able to understand? See what I did here? Like the sale value is given 25 and 30. Per unit separable cost is 10 and 30, which I calculated. It is given 16,000 and 24,000 for a quantity production 1600 and 800. So net realizable value at split point is 15 for the product F and the 20 for the product G, and then I multiply the quantity produced, which give me the net realizable revenue at split off. Revenue at split off. Okay, so 24, 16. Okay, so it is basically 3 is to 2. So if I apply 3 is to 2 to 30,000, so it comes like 30,000 multiplied by 3 divided by 5 and 30,000 multiplied by 2 divided by 5. Okay, so this way we calculate 18,000 and 12,000. Okay, so again, I mean, just revise in a short. Joint cost is 30,000. 16,000 and 24,000 is separable cost for product F and G. Quantity is 1600 and 800. So per unit separable cost is 10 and 30. Sell value, final product sell value in 20 and 25 and 50. So if I reduce from final sell value, separable cost from final sell value, then I got the net realizable value per unit at split of time, which is 15 and 20, and then I multiply with the quantity produced 1600 and 800 final quantity produced, which gives me the net realizable value at split of point. Okay, which this is 24,000 and 16,000, and that is my final ratio for allocation of joint cost. So it is basically 3 is to 2. So 30,000 I need to allocate in the ratio of 3 is to 2. So I got 18,000 and 12,000 as a joint cost. Clear?
So,
Yeah.
sir, is there any other method other than NRB and split off point?
See,
for calculating, allocating the cost?
okay, generally what happened, quantity is, means if you see the practical situation, okay, so quantity would be the main basis. Okay, I tell you something, because see, in example, you will in situations, there are a situation it is given, but if I produce something, if you actually visit the manufacturing plant, if you see the cost you are incurring at the point of split off, I mean the separable cost from the split off, before that, whatever the product you produce, it is a common. Okay, plus cost is also the same. Okay, after that, if I produce 1000 ton, so that is mainly the allocation factor to divide the common cost. Okay, generally in practical situation, if you see, the quantity is the best way to allocate the cost. Okay, so like here, because the X is my input for product A and B, and 1000 ton I divided 7000 here and 3000 here, which are same actually. Okay, so whatever the cost incurred to produce 1000 ton, that I need to bifurcate in the quantity. Okay, but if the sell prices, I mean whatever the manufacturing separable cost I am incur, okay, and after that I am getting here the 100% gross profit margin, and here getting the 10% gross profit margin, so it is as good as the byproduct. Okay, it is not the byproduct, it is as good as the byproduct if the consumption is very high for this product. Okay, so that's why we need to use the realizable net value or sell value at split off point. Okay, but first factor means whatever the practical experience I have, mostly the companies are allocating the joint cost on the basis of the production or the quantity produced. Okay, then it depends on the situation. If you're getting a higher margin for product A and then you need to shift some of the margin in a product B, then you are using the net realizable value or the sales value at split off point. Clear?
Yes, sir.
Then service department cost allocation to joint product. So the allocation of service department cost to joint product can be accomplished by using the joint product unit volume. Mostly it is unit volume relationship. Generally this we apply. Then byproduct. So byproduct represent output relatively minor value that are incidental to the manufacturing process. Byproducts have relatively low sale value that are not sufficient to cover their share of common cost. Otherwise, they would be joint product. Okay. So, what happened? Like as I said, the like whatever may be the cost incurred, means say for here, like product A is basically 1 lakh quantity and the product B is 10. Okay, so if you apply the joint cost, so whatever may be the sales value generated in a product unit 10, that may not cover the common cost. Okay, so because of that reason, this will be considered as a byproduct, and then whatever may be the revenue generated, that we reduce from the main product. So applied to main product, any proceed from the sale of byproduct are reduction to common cost for joint product costing. The revenue earned from their sale is credited to joint cost incurred either at the time of production or at the time of sale. Okay, so whatever may be the revenue generated from the byproduct, okay, that we deduct from the cost of main product. And we are not doing any separate costing of the byproduct. Main product. So in this situation, if you see, example could be anything like X is a common, then A and B. At the time of producing B, there is a Y byproduct. That can be possible. Okay. Or X, A and B. Okay. And at the time of both process or like at this level, there is a product C. Okay. That is also the byproduct. Okay. So if the product C arises at the time of split off, then you need to reduce from the joint cost. Okay. If the byproduct arises after the split off, then you need to reduce from the cost of product B, separable cost of product B. Product B. Okay. So this way you need to keep. And other than this, you need to consider as a miscellaneous separate income. As an alternative, revenue from sale of byproduct may be credited to the miscellaneous income.
Sir, in real world, for the major productions we see, the byproducts are sold in the scrap also.
Yeah, mostly it is a scrap.
Yeah, but that scrap value also has a huge variations, right?
Yeah,
That won't be conducted. That won't be. We should not neglect that product as well
no,
because that
that's
carries a value.
yes, that carries the value. But how you are going to treat this value? So there is a two options. One is either you need to apply to the cost of the main product, or you can show as a separate revenue, miscellaneous income. Okay. See,
Okay.
sometimes
So
we
is there any chance that byproduct can become our major products as well?
no. I tell you something. If see, I am no see first intention. I don't have any intention to produce product B. Okay, see how you are going to bifurcate by main product and the byproduct. If you are giving an offer to the customer and customer is accepting your offer, then it is your main product. Okay, but if you are selling a product in an auction and you are getting a offer from the customer directly, then you can consider this as a byproduct. Okay, means whenever if you see in an industry there is a various scrap dealer, they are buying the scrap from you, but it is not like this that you are going an offer. They are giving you an offer, you are just float tender. Okay, because I have a that much quantity of the scrap. Anyone, if anyone want to buy, you are not going to search for a buyer. Okay, and then you get a various offer from various customer. Okay, and then whatever whoever give you an higher offer, you are going to sell to that. Okay, so that is basically the first criteria. Okay, if you are creating a market for a particular product, then it is not your byproduct because you have an intention to produce that. For scrap, we are not creating the market. We are not making any advertisement, any product demo, or any trial and error. Okay, it is basically when someone giving a rate, you are showing, okay, that much scrap available with me. Someone giving you a rate and you find whoever give you a better rate, you are going to sell it. You are not going to market that product. Okay.
Yes, sir, but in jewelry industries
Hmm.
where they manufacture the rings, the bangles of the gold and silver,
Hmm.
there will be certain byproducts which will be evolved out of your main products. So that also will be treated the same way.
See again, if that byproduct has an alternate use and you are creating a market. Okay, means say for when you are making a gold ornament and if you feel the balance gold or the scrap gold, so gold in any form is a main product. That cannot be byproduct.
Yes. Yes, sir.
Okay, because you are still your process on the remaining scrap and then you are whenever the customer come to you, you are showing it. So you are market your product. So it is not a
Okay.
byproduct. Okay, so whenever you're not market means whatever may be the scrap, you're not going to advertise that okay, my scrap has that quality, this will give that benefit. You're not doing it. Okay, so when you're not market a particular product, that means you do not have an intention to produce and sell. Okay, so that is if you don't have any intention to produce or sell, then it is a byproduct.
Okay, sir.
Then byproduct costing versus, I mean, as we already discussed, whatever may be the byproduct joint, these are, I mean, it depends on the relative demand as it is clearly given. So here you can see before the invention of the automobile, gasoline produced when oil was refined had no value and was scrap for disposal. After the invention of the automobile, gasoline was the first price as a byproduct and then price as a joint product when demand for the gasoline increased. Okay, if the demand increase for a particular product, then our intention to produce it. Okay, if we don't have we don't have any intention to produce, okay, we don't want to create a market for a particular product, okay, then it is a byproduct. Okay, any doubt till now? Okay, performance management. So performance management is basically, it is a like I mean, whenever we are like checking what we did, okay, in comparison to predetermined ratios or in comparison with predetermined KPI, okay, so these are basically the performance measurement. Okay, so whatever may be the financial measure, okay, so that basically means that could be the quantitative as well as qualitative. Okay, quantitative is basically various ratios, qualitative is basically when we are like say for the zero defect, okay, or whatever the process we are following, okay, then we find out whether there is any optimization required or there is a repeated task. Okay, so these are basically the evaluation of the performance. Okay, then benchmarking. So benchmarking is basically the process of measuring process, product and service against industry leaders. Okay, and like there are three type of benchmarking. First is process benchmarking, understanding and optimizing process. Process means what happened, like if you have a if you want to make a payment to your vendors, okay, so it is not like this, you will get the call from your vendor and then you are going to make the payment. Okay, what you are going to do, okay, you need to first see who raised the purchase order, okay, whether the purchase order is authorized properly. Okay, after that you need to see whether you receive the material actually. Okay, this is as per the purchase order, as per the delivery date of the given in the purchase order. If you receive the material, then whether whatever the invoices required, okay, or submitted, this is in line with the legal requirement, like whether the e-way bill is issued or not. Okay, so that you need to evaluate, and once you evaluated all the documentation are in place, then you are going to make a process the payment, and it is not handed over to the vendor. Okay, that payment also authorized by some senior officials. Okay, and this way you are going to make a payment. Okay, so that is basically the process. Okay, so whatever the process we are following, whether it is adequate for the current scenario, that that you are going that you are evaluate or confirm when you benchmark it with the other industry. Okay, I'll give an example. If there is a Lala company means one person who is taking all the decision. So you will find there is a lots of loophole in a segregation of the duties. Okay, technically the person who raised the purchase order, he should not make the GRM. Okay, or he is not responsible for receipt of the material. But okay, but in Lala company, if we decide, okay, you can make the purchase order, you can make the GRN, you can book the purchase invoice, and you can release the payment. Okay, so that is basically the clearly lapses of the segregation of the duties. Okay, so this, and if one person doing all the task in a cycle, then there is a chances of fraud is very high. Okay, so to avoid this, what we need to do, we need to understand. I mean, then there is a chances of fraud is high, or someone who take the benefit of the trust of the like the owner, and he may start to do the fraud. Okay, so one day when the owner realizes the fraud is going on, then he evaluate, I want to implement a process. But then what process he want to implement, then he start to benchmark with the industry. Okay, so that is basically the process benchmarking. Then strategic benchmarking, comparing business model and approach to strengthen the strategies. Okay, so process benchmarking is something what we are doing in a day-to-day activities. Strategic benchmarking is something what basically we want to achieve in the future. Okay, so the strategy of the company, that could be anything. The someone want to sell their product at a premium, this is the strategy. Someone want to build the customer base, he's okay to compromise with the profitability. Okay, so these are basically the strategies. Okay, so whether this strategy give you the successful outcome or not, how you're going to evaluate before implementing the strategy when you are benchmarked with the other company. Okay, say for if I decided, okay, I want to sell my product at a premium. Okay, and and then I want to evaluate what would be the outcome of this my strategy. Okay, then I need to search for a competitor or the someone in the industry who is having a business of my size. Okay, and he tried to sell his product at a premium. Okay, so then, like, I'm company A. Okay, what I did, what I started to evaluate the pattern of company B. Clear? So if company B who decide to sell his product at premium, okay, then what I'm going to evaluate how much time he took. Okay, then, like, what I mean, payback period. The third one, whether he is able to retain the customer at premium. Okay, so these are the various factors he need to evaluate. Okay, along with this, he may study the company C. Okay, their strategy is basically to build the customer. And okay to compromise with the profitability. Compromise with profitability. Then what he is going to do? The same measurement he is going to do. Okay, so how much time it took? Same time. Okay, then, like, payback period. Customer base. Okay, just because he is selling at a low price, that doesn't mean he can retain the customer. Keep in mind. Okay, sometimes what happened, customer need the quality. Okay, so it may possible he may lose the customer base, and this customer may shift here as well. Okay, so when you are doing making any strategy and then you are doing a benchmarking with the other companies, then you come to know what would be the right approach or right strategy. Okay, so that is basically the strategic benchmarking. And then the functional performance benchmarking, comparison based solely on the outcome. So benchmark can be both external and internal. Okay, so performance means after completion, like I implemented the strategy and whatever may be the outcome. Okay, then I need to compare what is my expectation. Okay, that is basically the performance or functional benchmarking. Okay, so these are basically the type of benchmarking. And then you can do external benchmarking and internal benchmarking. External benchmarking means you are evaluating with your competitor. Internal benchmarking means whatever the target you achieved in the last year, okay, as compared to that where you stand. Okay, so there are like various benchmarking aspect. Okay, so here it is given two factor total factor productivity ratio. So total factor productivity ratio reflect the quantity of all output produced relative to the cost of all input used. This ratio can be used to compare actual cost per unit production level to budgeted production level. Okay, so that is basically when, okay, say for I consider I'm going to produce 1000 quantity. Okay, and for that I budgeted 1 lakh. Okay, if I produce 900 quantity and the actual expenses is 9,50,000. Okay, so if you compare this, okay, so there is a surplus of 50,000, but it is right. Any guess? Because I save instead of sorry, it is not 95,000. Sorry, and the surplus of 5,000. Okay, because I projected I need to incur a cost of 1 lakh, but I am able to complete my production, or actual cost of production is 95,000. So there is a saving of 5,000. Is it right? Is it saving? Any guess?
It is not right, sir.
Yeah,
It
correct.
should be.
Because the output and input ratio, if you compare, yeah, have you calculated?
Sir, I just thought it as for average.
So 100, I think so. And then here 100 and, or just a minute. So it is 105.55. Okay, so
Sir,
that is,
won't we be calculating 1 lakh divided by 1000 and 95 divided by 900?
yes, yes. So these are basically the average cost. Okay, so if you see here, the cost is high. Okay, so that is basically the total factor productivity ratio. So whatever may be the output produce, okay, that you need to compare with the budgeted input cost. Okay, then partial productivity ratios. Okay, so that reflect the quantity of output produced relative to the quantity of the individual inputs used. So this ratio can be used to compare the actual level of production input needed to produce a given output. Okay, which may be used for the comparison with the budgeted or a prior year input level. It is most frequently used. So here both the things are in quantity. Okay, not amount. Like for 1000 quantity, production of 1000 quantity, you may need a 3 material, which is 500, 200 and 300. Okay. But when you produce the 900 quantity, okay, you are using, this is 500, but this is 300 and this is 400. Okay. So if you see here, this is 7 and 3, 1000 and here 1200. So even your output is less, input quantity is high. Okay, so that is also the like partial productivity ratio. So here we are not applying the amount, okay, but quantity to quantity variation we are calculating. So garden furnishing Inc. produces outdoor garden sculptures for its high-end niche market. Each garden sculpture manufactured by the company includes two raw material, with with plastic being the largest product in input. During the previous month, the company used 20,000 pounds of plastic and 5,000 pounds of cement to produce 1,000 garden sculptures. Material prices at the time of production 1.25 and 1.75 for plastic and the cement. Calculate the partial productivity ratio for plastic and the total factor. So quantity of the output produced. So here you need to consider the quantity only. So if I consider the quantity, so it is basically 1000, output is basically the 1000 unit. for that, $1.25 LB in 1.4 and cement respectively. $1,000 and actual is basically the 20,000. Okay, so per unit it is 0.5, sorry, 0.05 sculpture per unit of LB plastic. And ratio something, what's our way? Per LB. So here basically huge deviation actually. 1.25 So 1000 multiplied by 1.25 if I consider. It is 1.25, and then it is 20,000. Somewhere some issue. Okay, and the output and cost of all input. So it is again 1000 divided by 20,000 multiplied by. Okay. This is 1.25, which is 5,000. Okay, 33,000. Okay, understood. This is cost. Dollar cost. Okay, sorry. Okay, so like PPR okay, this is basically the output produce divided by quantity of input use. Which is 1000 output divided by 20,000 quantity, which is 0.05 per okay, and then TPR. This is basically the output divided by cost of input. Output is again 1000 divided by cost of input is 1.25 multiplied by 20,000 plus 1.75 multiplied by 5,000. So it is 1000 is clear, and this number is 1.25 multiplied by 20,000, 25,000, and this number is 1.75 multiplied by 5,000. So in total cost is basically this plus this, and this is the output is 1000. So TPR is 1000 divided by 33750. It is 2963. Yeah, 33,750. So it is 0.02963 unit of output per dollar input cost. So this number we need to calculate for the 2 periods or with the competitor, and then we need to compare whether we are correctly going or what. So that is basically the benchmarking. Then internal benchmarking, of course, we need to yeah.
So can you explain by giving some other example, please? Because I'm not able to understand that
okay, understood
concept.
Yeah, so PPR, okay, and the TPR. Okay, in PPR basically you can consider it is for the quantity only. Okay, say for you are producing product A. Okay, what happened here, your competitor output 1000 quantity. Okay, and for that he need the input of 5000 quantity. Okay, for you are producing the 100 quantity. Okay, and for that you need the input of maybe 1000 quantity, or you can consider the 3000 no 1000 quantity. Okay, now what happened, it is basically we are talking in PPR, we are talking about the quantity only, quantity output, quantity input. Okay, this is like competitor, and this is cell, because we are doing the benchmarking. Okay, so now what is the PPR for your competitor is basically 1000 divided by 5000. Okay, it is 0.2, means he need a 0.2 input. Okay, for producing your per output. Okay, and here 100 divided by 1000. Okay, so it requires 0.1 input. Okay, for producing one output. Okay, so if you see, this ratio is more favorable. There is no scope for any improvement, because your competitor already producing with a higher input the lower quantity. Just a minute. Yeah, correct, no problem. Mhm.
Sir, won't
For
it be different?
just a minute, 1000 quantity, for 1000 in output I need a 5000 quantity, and for 100 output I need a 1000 quantity. For it is the 20% of the production, 10% something. Interpretation is something different. See, it looks like that we need there is a requirement for the improvement. Okay, so because my competitor producing a 10 times production with a 5 times input. Okay, so he is in better condition. Okay, so that is basically the output input ratio. I'm thinking from input output ratio. Okay, so he is basically, means the competitor is in a better position. With a 1 unit of input, he is able to produce the 0.2 output. Okay, and with a 1 unit of input, I am producing 0.1 output. So there is a requirement for the improvement. My consumption is high. So this is basically means we are calculating the output input ratio, and that we are using to evaluate whether my manufacturing processes or my activities is going as per the market standard or not. Okay, so this will give me a clue that I need to evaluate what could be the processes which I can avoid, or what optimization I can do here, so that my output input ratio get improved. Okay, so that is basically the PPR, I mean partial production, and the TPR basically here, I mean the same thing, but we are comparing the quantity output with
TFP, right?
quantity cost.
TFP.
Huh. CSP, what?
TPR, what's the full form of TPR, sir? Because total
Tot
factor productivity, TFP.
no, no, it is basically total productivity ratio, total factor productivity ratio. Okay. So it is basically we are using this ratio for the benchmarking purpose. I mean whether our processes is right or not, whether my input cost is right or not. It is like this. See, in practical situation, what happened if you use the inferior raw material, okay, with an inferior cost, okay, so your production may down, okay, but whether you need to go with the inferior raw material or the inferior cost, that basically you are evaluate with this formula. Means if the company like output and input, okay, if one company they are producing 1000 quantity with a like 500 quantity of input, okay, multiplied by 2 is the rate, okay. The other company they are also producing 1000 quantity, but they need a 1000 input multiplied by 0.5 rate. So if you see like here, for 1000 quantity cost of input is 1000, okay, for 1000 quantity cost of input is 500. So that is basically the TPR. So TPR is good in case of company 2, but if you see the PPR, then PPR is good in case of the company 1. Okay, so that we need to evaluate. I mean, what would be the impact? Okay, so partial factor we are using when we are using the quantity only. Sorry, quantity only. Okay, and the total factor we are using when we are using the cost. Internal benchmarking, of course, control the activities or anything, means the comparison of whatever may be the current production level, product line, department performance, geographic location, okay. So that is basically the internal benchmarking, okay. So how we are going to do it, like say for the department, so last year the finance department cost maybe the $20,000, okay, and this year the finance department cost maybe the $30,000, okay. So finance department is generally a kind of fixed cost, okay. So we need to compare why we need to increase the cost. Is there any additional work arises? Is that means if there is a merger or acquisition going on, so some people we need for doing an additional activities, or there is a changeover or takeover of the department, there is a change in a leadership role, okay. So that we need to understand, and then we evaluate whether the cost justifies whatever may be the situation, okay. So that is basically the internal benchmarking. It is not the case every time you can evaluate value to value, okay. Sometimes we need to evaluate on the basis of what we are going to achieve in a future. So you can do the internal benchmarking via using the some of the technique, okay. So one of this is control chart. So control chart is basically the important use in a statistical quality control processes. The geographical tool is used to plot the comparison of actual result by batch or graphical tool, batch or other any suitable constant interval to an acceptable range. So control chart show whether there is a trend toward improved quality conference or deteriorating quality conference. So whenever you are implementing, like this is your chart, okay. So say for initially your defect product is here, then here, then here, then here, so it shows the increasing trend. But if the defect product are here, then here, then here, then here, so that is showing the decreasing trend, okay. So if you see this control chart, so upper limit and the lower limit, what would be the maximum, okay. So if it is within that range, then it is okay, okay. But then there is a certain time it is improving, then there is a certain time it is again increasing, okay. So this way we are evaluate whether we are within the range or not, and if we are not within the range, okay, so in that situation we need to evaluate the reason for it, and if it is a permanent situation, then we need to take a corrective action, okay. Say for continuously our defective product increases, like this. Okay, so what are the reasons that means it is a general question. What are the reason for increasing the defective product? Can anyone guess?
So maybe the manufacturing process is wrong.
Manufacturing processes wrong.
Lack of strategies.
No, it is an operational activity, so it is not related to the strategy.
Raw materials
Yeah,
used are
raw,
low quality.
inferior, yeah, raw material quality. Um, Labor inefficiencies. Okay, then there is a supervision issue.
Machinery giving the huge costs.
Sorry.
Machines which we use are having the high cost than giving the income.
No, cost cannot be the determining factor, but machine condition that you can consider. Means whether it is the time for replacement of the machine, that you can consider. See, whenever we are discussing the quality, it is never concern about the cost. Okay, cost benefit analysis you can do on the basis of what prices you are getting in the market. That is something different. Okay, but you set up a process and continuously you are finding that your process is not going in a well manner, or not giving a expected result. So then you need to evaluate what would be the issue. Like manufacturing process, is there any change in the manufacturing process? Means earlier we are adopting a process which is something different, and there is a slight change we incorporated, and because of that there may be a increasing defective product. Then when we are sourcing a raw material, whether we are getting a correct raw material or not. Labor inefficiencies, any issue with the supervision. And supervision issue is basically sometime you are doing a turnover of say for 1000 crore, and suddenly you jump to the 2000 crore. So current style of working is not sufficient for us. Okay, so that also you need to evaluate. Okay, so that is basically the supervision issues. Then machine condition, as I said, if like first means see, every time it is not we just not wait till the machine stop totally. Okay, so we need to evaluate if earlier days machine is giving a that much accuracy, and now the machine is not able to give the accuracy. That means it is we need to replace the machine. Okay, so that whatever may be the like factors which affect my production processes, okay, we need to find out what changes we did, or what changes impacted to production quality. Okay, so this we can evaluate on the basis of this graph. Means when I come to see if you see the graph on a screen. Okay, so for first batch, second batch, third batch, fourth batch, fifth batch, there is a improvement. Okay, means we are coming in a first batch, there may be a 12 quantities defective product, then it is 10, 8, 6, and somewhere around 5. Okay, after that slight increase, and then again goes down. But in a 8 batch, again it shoot up or above the average. Okay, even though it is within the limit, then we need to evaluate whether it shows the increasing trend or not. Okay, and we need to take a corrective action. So control chart demonstrate how individual batches interval of production fall within a range of quality specification, from an acceptable upper limit of 15 occurrences to an acceptable lower limit of 5 occurrences, with production management establishing an average quality specification of 10 occurrences per batch or interval. Okay, so to further extrapolate the result of the control chart above, assume that the company's machine make the batches of rubber tires, with each batch consisting of 10,000 truck tires. Okay, so given management historical experiences with the production line, the company has set up an upper end defect rate of 15 tire per batch, and the company has also established a lower end defect rate of 5 tire per batch. So as any amount set lower could result in a production machine breakdown and repair. Okay, so see, keep in mind, if we have getting 100% accurate product, so that also may have a side effect. So that's why that also you need to consider, means upper limit and lower limit. Okay, so sometime we are getting 100% efficiency, that means there is a chances of breakdown. Okay, so even if you work in a such a way that 3 days you are doing a fantastic work, okay, so on a fourth day you need some rest, okay, and there is a high chances of fell down. So that also we need to consider while doing all this, set up all this operational measure. Okay, so the result graphically displayed on the control chart above indicate that the individual tie production batches interval are all within the upper and lower limit tie defect specification for production. So furthermore, the pattern of production shows a general decline in the defect as more batches were produced for each subsequent monthly time interval. The very last batch, number 8, is an outlier with more tire defect than the average of 10. Okay, so sometime if it is the 1 point only, then it is okay. Sometime exception may arise, but if it is showing a continuous trend, then it is a time for the investigation. So Pareto diagrams. So Pareto diagram are used to determine the quality control issues that are most frequent and often demand the greatest attention. So it is again the diagram means this shows the cumulative number actually. If you see, so these are basically the individual number, and then it is basically showing the cumulative numbers. Okay, cumulative percentage. Okay, so whenever we achieve the 75% of all defect, okay, like if you see type 3, type 2 and type 1 would address 3/4, 75% of all defect. Okay, so that is basically again so like here what you can evaluate like first, second and third. Okay, so this gives the almost 7, means if you correct this first, second and third, so you have 75% efficiency you can achieve like this, and then you can ignore time being the type 4, type 5 and type 6. Okay, so that is basically the outcome. Then cause and effect Fishbone diagram. So it is just, yeah.
Sir, in the Pareto diagrams, the declining of the
No, it is not the declining, just a minute. Okay, so like if you see, this is that type 1, type 2, type 3, type 4, type 5, type 6. So various issues. There are 6 issues. Okay, so first issue is almost the 200, means we give the 200 quantity, total 150 because of total second, it is 150 because of third, it is 100, then 75, 50, 50 and 25. Okay, so if I consider sum all together, so it is basically 600 quantity. So out of this 600, 450 is mainly because of 1, 2 and 3, 75%. Okay, so if I correct the 1, 2 and 3 first, okay, so I can save my product, means almost 75% efficiency I am able to achieve. So I can ignore time being type 4, type 5 and type 6.
So what if type 4 after type 3 the issues arise?
It is not like this issue. See, say for I tell you, like because of raw material quality, there is a defect. Okay, this is my type 1. Because of labor efficiencies, there is a defect. This is my type 2. Because of supervision issues, there is a issue. This is my type 3. Okay, because of manufacturing process, this is my type 4. And because of machine condition, this is my type 5. So this is basically the example you can consider. Okay, so here like because of raw material quality, 200 defect happened. Because of labor efficiencies, like 150 defect happened, and because of supervision issues, like it is 100 defect happened. Okay, if I combine all this, okay, so this is basically total 450. Okay, because of manufacturing process, it is basically the 75 quantity defective, and because of this it is 50, and you can consider the other one which is 25. This is my type 6. This is 25. So what happened? My priority is to cure this defect first. Okay, so I need to take an action on raw material quality, labor efficiency, and supervision. And timing, I can ignore the machine condition, other factors, and the first one is manufacturing process, because the defect because of this lacuna is less. Okay, so that it is given. So what happened means like the cumulative chart is also I'm getting, because I need to know to what extent I'm able to achieve the desired level of efficiency. So first, second, and third, if I correct this, then I may achieve the 75% efficiency, and that is my benchmark.
So how is the red line, the percentages are derived? Will that be given?
No,
Or
it is not given. See, if you sum all together 200, 150, 175, 50, and 25, so it is basically the 600 quantity in total. 1, 2, 3, 4, 5, and 6. So 1 is basically 200, and all together it is 600. So 200 divided by 600, which is 33%. Okay, after that there is a 150. Okay, so it is not 150 divided by 600, it is basically the 350 divided by 600. Okay, cumulative. Okay, so it is approximately 58%. After that there is a again 100, so it is 450 divided by 600, so cumulative it is 75%, like this. So 200, 150, 100, which is 450 against 600, so it is 75%. And then you add 75, so it is basically 525, which is 600, so it is 88%. And then add 50, so it is 575 divided by 600, and then 600, so it is 96%, and then it is 600 and 600. So I'm comparing all my defective product, okay, and the ratio I'm going to calculate with the cumulative effect means first the highest level of defective product in type 1. So I calculated, okay, if I recover the type 1 only, then it is basically the 33% efficiency I'm going to achieve. But if I recover type 1 and type 2, that I'm going to achieve 58% efficiency. If I recover 1, 2, and 3, then 75%, like this. So whatever may be my desired target, if my target is 33%, then I need to take an action on type 1 only. If my desired target is 58%, then type 1 and type 2. And as my desired target is 75%, then type 1, type 2, and type 3, like this. And this is most common use, means if you see in a practical experiences, okay, particularly in manufacturing unit, we are using the same pattern, same formula.
so from the exam perspective, how will the question arise from all these diagrams?
No, see, like this topic, you will not get much question on this topic. This is for information. But if you get the question like this, they may ask, like they may give a situation where the numbers are given, and then if you want to achieve the 75% efficiency, what action you are going to take? Then in option 1, type 1, type 1, type 2, type 2, type 3. So you need to calculate the cumulative effect. But mostly on those topic, there is a less chances to get the question.
Okay.
So cause and effect fishbone diagram. So that is basically, I mean, if you see, I'm just going to diagram directly. So here, if you see, this is basically the defect, the horizontal line, okay. And after that, the first machinery and material. This is basically means what is the reason for the defect, okay, and then the method and manpower, which become the cause, okay. Cause, I mean, cause and effect, basically the issue here. So if you see, the fishbone diagram indicate that the main category of the potential causes of the defect called the large bones, okay, are machinery and method use, okay, material and use of manpower, okay. Then individual factor under each primary factory can be added to on the bone and provide, like for this bone, the horizontal is basically the So horizontal line is basically the bone, and then each factor of inefficiency, this one, this one, this one, this one, that get attached to this bone like this. Okay, so, and because of that reason, means because of method preparation is incomplete, this is basically the cause, this is basically the effect. Because of manpower, means inexperienced worker, then material wrong consistency, machinery setting wrong. Okay, so these are basically the cause and effect relationship. Okay, so here I mean, if I want to improve my manpower, but what I need to improve? Okay, so that reason I'm getting here. Okay, any doubt here till now? Okay, so customer retention rate, the formula for the customer, I mean, these are basically the non-financial measure, means the information which you are not getting in your balance sheet or the financials. Okay, so customer retention rate. So formula for the customer retention rate is number of total customer at the end of the period minus number of new customer added within the period. Okay, so you will get the retention and the number of existing customer to the start at that time period. Okay, so whatever may be the total customer, and we need to reduce the acquire. Okay, and that we need to compare with the existing customer at the start of the period. Okay, so that is basically the CRR, customer retention rate. Okay, and the churn rate is basically 1 minus CRR, means how the customer which will left, those are left, that is basically the churn rate. Okay, so if you can see the example, a company had 1,400 customer at the beginning of the fiscal year. They added 240 new customer during the year and 1,500 year-end customer. So how much customer they are able to retain actually? 1,500 minus 240. Okay, these are basically the old customer carry forwarded. Okay, so which is somewhere around 60, 1260 divided by 1,400. 1,400 is basically the 1,400 is basically the total customer at the start of the year. So which is approximately 90%. Okay, so if this is the 90%, then the remaining, like the 10% is my churn rate. This is retention, customer retention rate, and this is customer churn rate, 10%. Okay, so this way we are going to calculate. Okay, the same way means like defect product. Okay, so these are basically the non-financial ratio. Then employee turnover ratio. So it is again the same way. Okay, so summation of the total number of employees who leave within a specific period and the average number of employees who work within the selected time frame. Okay, so because like we need to calculate the people those leave, say for 20 people leaves, okay, and average number of employees who work in the period, say for 100. Okay, so it is 20% is my employee turnover. Okay, 20% people may move. That is my employee turnover ratio. So 32 employees leaves the company over the course of the fiscal year. The average number of employees who work throughout the year is 200. So 32 divided by 200, 16% is my employee turnover rate. Okay, so we will take a 15-minute break here and then again I'll start. Okay, so labor productive hour is basically the total output divided by total hours work. Okay, so it is output we required in a quantity. Okay, and how much hours work by the people. So that is basically the labor productivity rate. So
Sir, screen is a bit dim, I guess. What about the other students? Anyone?
screen is visible or
Yes,
not?
now it's good.
Okay,
Yeah.
okay. So, we need to consider the output in a quantity in unit. Okay. So, company produces 5,200 unit of a product over 1,300 total hours work for a ratio 4:1. If the worker are able to maintain the level of productivity and work 1,400 hour next month, they can produce 5,600. So, it is basically the simple ratio like 5,200 divided by 1,300 and multiplied by 1,400. So this way we can estimate what would be your next a month production. Okay. Then ticket response time. So it is basically when you are providing a service. Okay. So in that situation, whatever may be the tickets you have and how much time you spend to close the ticket. So average ticket response time you can calculate. So ticket response time represent the total time elapsed between a customer initiating a ticket for a service and agent first responding to it. So goal is to reduce the amount of time it takes for a response. So IT department receives 120 ticket in a month of February. The average response time per ticket is 4.5 hours. So department had a goal of reducing the response time by 20% within 3 months. So although the department receives 150 ticket in the month of May, the results show an average response time per ticket is 3.5 hours. So reducing the average response time by 1 hour represent a reduction over 20%. So it is basically like when you get the 120 ticket, you need the 4.5 hours. Okay. So, to resolve the per ticket, okay. So, to resolve the per ticket, you can calculate easily what would be the response time. And then when you get the 150 ticket, it is by 3.5. Okay. So, technically what happened? You may require 5.6 hour, okay, but you are able to close. I mean, if I consider this as a rate, then for the calculating the 150, it is 5.6 hours you may need, but you are able to close at 3.5. So there is a saving of 5.625 minus 3.5, which is 2.125. Okay, and if I compare with this, like this divide by this, which is more than 20%, so it is 37. Okay, so over 20% efficiency we are able to achieve. So that is this way we are I mean, these are basically the non-financial parameter which we are using to judge the efficiency. Okay, non-gap measure. So non-gap measures are derived by taking gap measure and adjusting them in a ways that better measure of performance. So example include EBITDA, free cash flow, core earning, and the adjusted net income for non-recurring expenses. So as per gap, we are preparing the financials. Okay, but I mean, on the basis of financial, you cannot judge whether the company is performing or not. Okay, so I'll take an example. Depreciation, it is given here, but if I consider, or we can consider the both depreciation as well as interest. Okay, so interest is basically non-operating income expenses. Why we consider the non-operating? Even though we incur the interest on a loan which we utilize for the business. Okay, so it should be the part of the operating expenses. But interest largely depend on how you are making your investment. So if entire investment for by way of equity infusion, okay, so in that situation you do not require to bear the equity infusion, then you do not require to bear any interest. Any interest. Okay. In that situation, interest. Okay. And your net income might be higher. Net income might be higher. Okay. So because of that reason, you cannot compare with your peer industry. Okay. Or peer competitor. Okay. So what we need to do, we need to adjust the net income and we need to calculate interest, means add back interest. Okay. The depreciation is again the same thing. Depreciation is a non-cash expenses. Okay. So that also you need to add back. So that's why you are able to get EBITDA. Okay. Means net income plus tax as well. Okay. So EBITDA. And then you can compare with the peer industry. Okay. So this will give a proper explanation for why why there is a loss or why we are not able to achieve the desired margin. Okay. So EBITDA stand for earning before interest, taxes, depreciation and amortization. Amortization and depreciation more or less same. Depreciation we charge on a tangible asset and amortization we charge on a intangible asset, and is used to evaluate companies' operating performance. The idea is that the measure removes a factor that may differ between the companies, but it do not impact the operating performance. So that's why we are basically removing this factor. Okay. Interest I explain. Okay. Someone may finance by equity and someone may finance by loan. Okay. So that will given because of that reason the variation may arise. Why we consider? Because the depreciation is basically, means it is just like we are using the asset. So at one point of time, we invested the money and now we are recovering. Okay. Still, why we are going to add back the depreciation? Can anyone explain?
Can you repeat, sir?
See what happened, interest I explained why we need to add back in an interest while evaluating the operating performance, your operating performance with respect to the customer operating, competitor operating performance. Okay, that I explained because sometimes we do the investment entirely through the equity, so we do not require to face the interest cost. Okay, and that's why we need to add back the interest. Okay. Do you know any logic why we need to add back the depreciation? Anyone has know any logic why we need to add back the depreciation? Why we should compare the EBITDA and why we should not compare the EBIT?
Because depreciation and amortization, like it's not the actual expense we incur. We depreciate the value as and when we when we use the machineries and all and the goodwills.
Correct.
It's not the actual thing which we incur in the day-to-day transactions.
No, but at the time of acquiring the asset, we spend the actual money. Even for goodwill we are recognized only when we buy it. Self-generated goodwill we are not recognizing. Any other like it is just a like guesswork. Anyone has any other idea? Okay, so there are two factors actually. One is basically the age of machine. We don't know when the competitor brought the machine, and so it is not the comparable. And the second is depreciation method use. Someone use the accelerated method and someone use the straight line method. Okay, so because of that reason, if we consider the depreciation, we cannot compare it. Okay, so that's why we need to add back again. Okay, it is not just because of the it is a non-cash because in free cash flow we are considering this. Okay, but mainly we are using the EBITDA to judge the operating performance, because sometimes the people are using the different depreciation method, and the age of the machine also not the same. Okay, so that's why we need to add back the depreciation again, or we mostly compare the EBITDA. Then free cash flow. So free cash flow is the cash a company generate after taking into consideration the cash outflow that support its operation and maintain its capital assets. So it is a cash after paying for operating expenses and capital expenditure, and is calculated by taking net cash from operating activities and subtracting capital expenditure. Okay, so free cash flow is basically okay, they evaluate your net income as well as the changes in a working capital. Working capital. Okay, so that is also the important measurement. Means sometime what happened, I saw the businesses where they are earning the say for the 5 crore, and then their working capital get increased by 15 crore. Okay, so even though you are earning the amount, but you cannot encash it. Okay, so that's why you need to, mostly if you want to evaluate the businesses, you need to evaluate on the basis of free cash flow. Okay, if you are able to generate the positive free cash flow, then makes sense. If you are not able to generate the positive free cash flow, you need to evaluate or keep in mind at some point of time you need to face the cash crisis. Okay, so that point you need to understand. Okay, so I mean, I'm just giving an example. Okay, say for in a first year you are able to generate 5,000 or 500 million. Okay, and your working capital increased by 1,000 million. Okay, so it is basically the negative cash flow. Okay, so it is net income, and this is the increase in working capital. Okay, so even though you are in profit, you need to approach to financer to get the loan. Finance. Okay, and you need to think, I mean, the business model is such that, okay, so every time, I mean, the way you increase your business, you need to go for a additional finance. Okay, so in lifetime of the business, even though you earn the profit, but you cannot get the money back. Okay, so that is basically the risk. So always you need to compare what is your free cash flow. Okay, so free cash flow is basically like cash from operating activities, okay, it covers both net income plus changes in working capital. Okay, and then if any additional capex investment, that also you need to deduct. Okay, capex investment you need to deduct. This will give you the free cash flow. Okay, that you need to keep in mind. Then core earning. Core earning are the profit derived from a company's main or principal business. This earning disregard one-time revenue or cost that are not part of the main business activity. So I tell you something, means I'll giving one example. Okay, I mean, that I saw in my practical career. See, we acquire a company. Okay, and then what happened before start of the operation? Okay, we started to sell some of the machines, okay, at say for like this may generate a 1 year expenses, entire expenses. Okay, so because of that reason, and all the machines are in like 100% depreciated. So whatever may be the amount we receive, that goes to my income statement. Clear? Are you able to understand? Okay, my entire 1 year expenses financed by the scrap. Okay, and because the asset are fully depreciated, okay, entire revenue which I generated by selling of the asset, okay, that goes to my net income. Okay, so if I consider this as my income, say for this year, I'm making a turnover of 500 crore, okay, and my 1 year expenses may be the 600 crore, okay, so that is basically adjusted against like scrap sale. Okay, so entire 500 crore revenue is my income. Okay, so is it possible the same income at 1000 crore level? Okay, so it is not possible because this is the one time effect. Okay, this scrap I received, or I'm going to change my production line. Okay, so this is the one time income. Okay, so that's why always whenever you are evaluating the business, okay, you need to make sure whatever may be the one time effect that you need to remove. So that's why we need to consider the core earning. And if you see the 3.2.4, so it is adjusted net income for the non-recurring expenses. Say for there is a, I mean, again the same example I am going to continue. For first year we need to pay or offer a severance compensation because at the time of acquire, okay, and I want to change my product line. So whatever may be the technical people available with me, I need to remove them from my system or from my organization, and for that I need to pay them a severance compensation, severance package. Okay, so this is one time expenses, so that also we need to adjust. In the same way, one time income we need to adjust, one time expenses we need to adjust. So this measure takes net income and adjust it by removing non-recurring expenses which are not expected to impact the income statement in a future year. So that also I need to adjust. Okay, so these are basically the some financial parameters which we need to use for the benchmarking. Then financial and balance scorecard. So balance scorecard is basically the most widely tool used by the organizations so that they can understand on or they can review their KPIs on a regular basis. Okay. So financial scorecard take many form, including the budget versus actual and other variances report, as well as overall analysis of business performance. Financial performance is often a function of the organizational decision and the performance objective given to each segment. So type of responsibility segment. Okay, so generally it is the cost, revenue and the profit. Okay, so this way we are make a responsibility segment. Okay, and the investment. Okay, I think, yeah, so 4 BUs SBUs. So those people who are only responsible for controlling the cost, this is the cost SBU. Managers are held responsible for generating revenue, this is the revenue, and then the profit managers are responsible for producing a target profit, accountability for both revenue and cost. Okay, and the investment managers are held responsible for return on the asset investment to produce the earning generated by the SBU. Okay, see, like objective of the organization is generate the net worth. Okay, and then they make a like various they gave a responsibility to the managers, okay, in a separate way, because if someone want to only reduce the cost, okay, he may compromise with the revenue. Are you okay with me? If I want to reduce the cost, what does it mean? I'm not going to hire the employee. What is the effect of that? I'm not able to increase the turnover. So it is positive situation or the negative situation. Anyone can, means just to reduce the cost, can I do I need to avoid hiring of new employee? Any guess? Of course not. Okay, so that's why what we do, we generally want to bring the equilibrium. Hello. हेलो. हेलो. हाँ सुदीप, तो मुझे ऐड करना. Yeah. Sorry. So we are discussing like the situation. If I want to reduce the cost, I'm avoid to hire the employee. Okay, to hire the employee, and because of that, not able to increase the turnover. So reduce the cost is a right option or not? Any guess? Of course not. Okay, so that's why we generally in an organization we give this kind of responsibility to different people, like cost saving. Okay, then revenue generation. Okay, then profit and investment. Okay, we are giving to the different people. Okay, so that like everyone can focus on their core activity, and we may generate something which is desirable for the organization. Means the cost, the person who is responsible cost saving, he is try to reduce the cost, but he need to support for the revenue generation. Okay, so person who is responsible profit, he may like reject the orders which give the negative impact. negative impact. Okay, then investment, I mean, if you are doing some investment, then someone is going to check whether I am able to generate a proper return or not. If I am not able to generate the proper return, then expansion may be on a hold. Okay, so that's why we need to give this responsibility to the different managers, okay, so that we can get the equilibrium position. Then areas of accountability in the financial scorecard. So product line. Okay. So the effectiveness of each strategic business unit is often subdivided into the additional area of accountability. Okay. So here it is given customer. Okay. Three aspect it is given. Anyone can share any other ideas?
Say the diversifications of the products
Correct. Right.
can be a part of this.
Yes. So diversification, of course. Other than that, you have a product line. Okay. So someone is responsible for product line, but you need to increase or diversify. So already we consider here. Beside this, research and development.
Marketing techniques.
Yeah. Research and development. Okay. Then of course the marketing. Most important. Why you people are doing the CPA?
Pricing strategies.
Yeah. But you can drive the strategy without the knowledge of CPA also. Any other? If you appoint as a CFO in on any organization, your first target is basically how you can reduce the weighted average cost of capital, compliances. Okay, and return on investment or return on asset. Okay, so finance is also one of the area where the management need to focus. Okay, so these are basically the accountability area in a financial scorecard. Okay, it is not like this, the only we are going to work for a customer, only we are going to work for a geographical area, or only we are going to work for a product line. Okay, then second, like employee retention. Retention, learning of the employee. Employee. Okay, so these are basically the HR and finance activity, which also considered as a primary activity in any businesses. Okay, we generally consider this as a support services, but if we cannot organize a finance in a proper way, you cannot generate a profitability. Okay, then the contribution reporting. Okay, contribution margin, I hope everyone is aware. What is the contribution margin?
Actual sales minus the variable cost.
Yeah. Sales minus variable cost. Why we are consider the contribution margin as a like for the evaluation criteria, and why we cannot consider the gross profit margin?
Because gross profit includes the fixed cost as well.
Yeah, it is the fixed cost, which you cannot control. Okay, so as you cannot control, that cannot be the measure for the efficiency to measure the performance. Okay, so that's why we generally consider the contribution margin for the as a KPI. Okay, then controllable margin. Okay, if I consider the controllable margin, okay, so controllable margin means those how I can say, what is my contribution margin minus controllable fixed cost. Okay, controllable fixed cost means maybe you can close down one entire shift. So because of that reason, you may not save the depreciation on a building, but you can save the electricity expenses or the canteen facility that you can save. Okay. Here they gave an example of advertising and sales promotion. Okay. So these are basically the controllable fixed costs which we can avoid. Okay. Now I tell you something. Means if you are a subsidiary of a German company, okay, and they will give an invoice or charge you for IT services. Okay, and here the cost like maybe local IT cost, okay, which includes some software, maybe for document management. Okay, which you can like either you can pay the renewal fees or you can try to manage manually like this. Okay, can you explain I mean out of this what is the controllable cost and non-controllable cost and why? At subsidiary level, anyone can guess? See, this cost decision taken by the group corporate, and they will not involve you in any decision making, so you cannot control it. You just need to absorb, so non-controllable. Local cost, which the decision taken by local managing director or the local CEO, and he may decide, okay, some software we should not use, so we can save some renewal fees. Okay, so these are basically the controllable cost. Okay, so whenever you are preparing, means you are evaluating your performance or you are preparing a budget, you need to always evaluate which costs are not controllable and which cost you can control. Okay, can you control the variable cost?
Yes, sir.
Okay, so you can control the variable cost. Okay, so whenever you are going to control the variable cost, it affect to your contribution margin, correct? Okay, so because of that reason, your contribution margin get increased. Okay, but
Sir,
yeah,
so the controllable fixed cost will be affecting the contribution margin as well, or that will be the separate?
no, I'll coming on it. I'll coming on it. Okay, so that's why I started this topic. Can you control the variable cost? Okay, but we start the evaluation from the contribution margin. Okay, we are not starting the evaluation from sales or the variable cost. We start the evaluation from controllable margin. So whatever may be the controllable variable cost, it will not affect us. Means whenever I'm doing a standard costing, okay, so at that time I consider whatever the variable cost I can control, that I already put in my budget. Okay, so contribution margin means whatever may be the variable cost I can control, that I can put it in my budget. Okay, and then I start the evaluation from contribution margin. After that, I am deducting from here the controllable fixed cost. Okay, so for that you need to identify each and every area where you can control. Okay, and then you can evaluate like whether you need to go for a, like how I can say, the expansion or whatever may be the situation. Like if you're doing an advertising and sales promotion, so you may save the cost, but you may need to sacrifice some revenue as well, which will affect to your contribution margin. Okay, so always you can start your evaluation from the contribution margin, and then you need to make sure what are the controllable fixed cost or controllable margin, and accordingly you need to evaluate whether you need to go for a controllable margin or not. Clear? Any doubt here, or any point which you feel that we need to discuss? So local management, yeah.
As you said, the example of the building,
Hmm.
that the building we are vacating and that can be the controllable fixed cost.
Hmm.
But for uh, removing a segment from the business also needs a huge time period.
Yes. So that you need to evaluate.
And yeah, and so suppose exiting from the business due to insolvency, that also take a minimum of 8 months to 12 months
Hmm.
for dissolving of the business and all. So that period, that duration will be how the cost and all will be calculated in that duration. So
See, I tell you something. Okay, that is the separate scenario, but I came across this kind of situation. I'll give one example. Okay, first, see, local management can control variable cost plus controllable fixed cost. Okay, so you need to judge their performance on those basis. Okay, so again the picture come contribution margin plus controllable fixed cost. So whenever we are calculating the net income, okay, so generally what happened, okay, profit arises, okay, and we decided we need to incentivize to the management. Okay, at that time you need to evaluate the why the profit is arises, because of controllable fixed cost or because of low share of the common expenses, which is not controlled by the local management. Okay, so that you need to evaluate. Okay, now I coming to your question. Like whatever may be the cost we need to incur at the time of closing. Okay, see, in this period, means generally when we are doing any merger, acquisition, divestment, okay, in this period, we are aware basically we need to close the business. Clear? Okay, if I need to close the business, I need to complete the pending task. So in this period, there is no any revenue, but there is a cost we incurred. Okay, so whenever you are going to deal with the prospective buyer, okay, or you want to liquidate whatever may be the post decision cost, okay, this will become the one time cost. So this is not the question of control or non control. Okay, it is basically the kind of severance or liquidation cost. Okay, so this cost is separately budgeted. Okay, so whenever, I mean, particularly if I close the business, that is a separate issue, or whatever may be the asset sell, from that I am going to reduce this cost. And if I'm like divesting the business with a share transfer, so whatever may be the cost incurred, that will reduce my selling price of the company or the purchase consideration of the company. Okay, so this way we are going to treat this cost. So this we consider as a one-time cost. Whenever the liquidation cost, I called it as a liquidation cost, even though we are selling to the other company or the other management. It is for the existing management. It is a liquidation. Okay, so that we need to generally we need to reduce from the purchase consideration. Okay.
Yes, sir.
So allocation of common costs. So managers have control over variable cost and over controllable fixed cost. Financial scorecard that use contribution reporting factor in this cost. Common costs are not controllable and that we need to remove it. Okay. So approaches to the rational allocation of central administrative costs must be understood by the responsible manager and must be fair and logical. So employees are more motivated to achieve the corporate goals if they believe that the common costs do not represent the arbitrary burden. Okay, so generally we need to evaluate the management performance by reducing those costs which are not controlled by them. Okay, if we consider this cost which they cannot compare, then the performances evaluation of the performance is not logical and it may down the morale of the managers. Okay, and even if you want to charge, then you can explain to the existing management and then you need to evaluate. I mean, you need to justify it is a logical cost. Then and only then people get motivated. So contribution margin reporting, so that you can consider now. Okay. So I mean, so it is just a given an example. So I'm just instead of reading means how we represent basically. Okay. So like contribution margin we are calculated means the way we need to calculate, and then non-controllable cost we are reducing. Okay, and the contribution by SBU is 10, 10, 9, 6 like this. Okay, and the untraceable cost means which you cannot allocate to any reason. So that we are going to separate out, and then we calculate the operating income. Okay, so contribution margin, then controllable cost, controllable fixed cost we are reducing, which will give me the controllable margin. That could be my evaluation area. And from here, I need to evaluate the performance of the management. Clear? So this four element we generally maintain in a balanced scorecard. So financial, internal business processes, customer satisfaction, and advancement of innovation and human resource developments, learning and growth. So that factor also very important. Okay. So typically the scorecard describes the classification of critical success factor, the strategic goals, the tactics, and the related measure associated with strategic and tactical goals. Okay, so before going ahead, can anyone explain what could be the financial parameter which we need to evaluate? Okay, means parameters which we need to evaluate for the balanced scorecard. Anyone can guess?
Can you repeat, sir?
Like the balance scorecard, if you see on screen, there are four factors. So I'm just trying to get an example. What could be the financial parameters which we need to assess? Okay, I'll give an example. The profitability that we need to assess.
The dividend portions
Yeah.
and the interest.
Interest cannot be the financial parameter. Dividend, because you are distributing to the shareholder. That could be the financial parameters.
Interest earned from investment.
No. That is basically when see, interest expenses or interest income cannot be the part of the financial parameters, because it is, you are taking a loan, so you need to absorb the interest. You are investing the money, so you can you will get the interest. So, and we are not the investment company. Our operating source of income is something different. So we need to maintain the parameters only in that line. Okay, so dividend which we are paying the shareholders, that will generate the value to the shareholders. So that's why this could be the parameter. Beside this, means if you are a CFO or the CEO of the company, what financial aspect you look for, and which help you to generate net worth for the shareholders or your targets. Sales per hour per employee. Profitability we already discussed. Controllable margin we just discussed. Okay, then cost saving. Okay, so these are basically the financial aspect which we need to see. Now, what are the internal business process which you need to mention in a balance scorecard?
Is it the techniques which we implement, techniques and strategies,
Correct.
and the employee coordinations, the teamwork?
How you are going to identify? Means there should be something like here. What are the technique we improve? So that you can mention. Strategy you can mention. Okay. So cycle time you can mention. If you reduce the cycle time, the productivity get increased. Okay. Cost per transaction or cost per transaction you can mention. Okay. Defect you can mention, because this is also the result of internal processes. Okay. Then various ratios like inventory turnover ratio, these you can mention. Okay, so this is internal processes. Then customer satisfaction.
Feedbacks.
Yeah, feedback. So complaint, number of complaint in a month. Then we just learn something.
Post-sale service.
Yes, post-sale service. One topic we covered today. Customer retention rate. Okay. And then human resources and innovation. So training. Okay. Iteration. Okay. Why we need to consider iteration? Because when the one employee left and the other come, you need to spend some time on the new employee training, and whatever the knowledge gained by the existing employee that you cannot capitalize. Okay. So that's why we need to consider the iteration as well. So we can see one example here. So InstaFab Manufacturing is is building its business using a cost leadership strategy. Okay, so what is the cost leadership strategy? Can anyone tell? There are two kind of strategy for promoting the market. One is cost leadership and the differentiation.
Focusing much on the cost
Yeah,
of the products.
so maintain the lowest cost of the production so that he can get the better prices from the market. Okay, or competitive in the market with respect to the prices. Okay, so the management of InstaFab has identified four strategic goals, one associated with each classification of the critical success factor to help it business grow. The strategic goals are capturing additional market share, maintaining low cost that are supported by low prices, becoming a low price leader, and linking strategy with reward and recognition. Okay, so if you see here, financial prescriptive, capture increasing the market share, critical success factors, maintain customer base, and the tactics and measures steadily expand the services. Okay, so and the measure is company versus the industry growth, volume trend line, and the percentage of sales form. So means how you are going to achieve this, that you need to use the tactics, and how you are measure the performance that you can get in a measure. The same way internal business strategic goals. So maintain low costs that are supported by the low prices, critical success factor, maintain consistent production, and the tactics and measure improve the distribution efficiency. So you can measure cost compared to the competitor, first pass rate, and the percentage of the perfect orders. Then customer prescriptive strategic goal, become a low price leader, critical success factor, and anticipate customer needs before competitor, and the tactics and measure increase the customer satisfaction. And how we can measure our cost versus competition, percentage of product in R&D being test marketed, and the customer service. The last one is advanced learning and innovation. So strategic goal is basically link strategy with reward and recognition, and tactics and measure promote entrepreneurial culture. Okay, so there are two, and the like measure is net income per dollar, variable pay, and annual reports. So this is basically the balance scorecard. Generally, the balance scorecard, I mean, the criteria which we are keep it, or the instead of criteria, the KPI which we are keep it, that we bifurcate in this four element, okay, or component. So financial component, internal business processes, customer satisfaction, and advancement of innovation and human resources, that you need to keep in mind. Then cost of quality. So cost of quality is basically there are three types. Means the first is conformance cost, and there are three types: appraisal and the okay, internal failure is okay. Conformance cost. This is basically the prevention cost, and the appraisal cost. So conformance cost is basically like before using the product, we need to check, okay, it is basically we can use now. Okay, so third one is basically the non-conformance cost. Okay, so preventive costs are incurred to prevent the production of defective unit. This includes such cost element as employee training, inspection of expenses, raw material, preventive maintenance, redesign product, redesign of the processes, and search for higher quality supply. So preventive cost incurred, okay, to prevent the defective units. Okay, so whenever there is a prevention cost is high, so there is a chances of defective unit or defect finding the defect is low. Okay, So that also the balance we need to make. So these are basically the preventive cost. Appraisal cost is the cost incurred to discover and remove the defective parts before they ship to the customer or to the next department. So this cost include statistical quality check, testing, inspection, maintenance of the laboratory. Okay, and non-conformance cost means internal and external failure. So internal failure cost are the cost to cure or detect discovered before the product is sent to the customer. So this cost include rework cost, scrap, tooling changes, cost to dispose, cost of the lost unit and downtime. And the external failure is warranty cost, cost of running the good, liability claim, lost customer and re-engineering and external failure. Okay. So you will get the question in an examination. You may get the question basically where you need to bifurcate the cost on the basis of appraisal, preventive, appraisal, internal failure and the external failure. Okay. And then conference and the non-conference cost. Conference cost means before using or before dispatching the material, whatever the cost we are incurring, and non-conformance means after identification of some defect, whatever the cost we are incurring. Okay. So, like in conference cost, there is a prevention cost and the appraisal cost, and non-conformance cost, there is a internal failure and the external failure. Internal failure, when the issue detected in-house, okay, and we need to incur a repair cost. External failure, when the issue detected outside and we need to incur the expenses. So quality reporting, as I said, means you need to bifurcate the cost in appraisal, prevention, internal and external. Okay, and you may get the question on this topic in examination. Okay, now we need to see this example, cost of quality. Glass product experienced several internal failure cost in the past operating year, including significant production downtime and the batch rework cost. Additionally, GPI had external failure cost after shipping glass product to its customers, including material costs pertaining to the product return and the lost customer. So their non-conformance cost is very high. So at the beginning of the current operating year, the company production manager was replaced. The new manager in this first week on the job hired a statistical quality technician to test the product as they exited the product line. The new production manager then implemented quarterly employee training, preventive maintenance measure, and weekly inspection by line supervisor. So though the first half of the year, this appraisal and prevention measure have reduced production downtime by 90% and have reduced the company's scrap cost by 50%. So as a result of this prevention measure, the company has has also experienced fewer glass product return and has lost no customer in the current operating year. Okay. So what is basically the like logic here? Means if my conformance cost is high, so what will be the impact on non-conformance cost? Cost. It is increase or decrease? Can anyone tell?
Decrease.
Sorry?
Decrease.
Decrease. Yeah. So if I put a cost on a prevention and the appraisal, which will help me to reduce my internal and external failure cost. Okay. So we need to compare. I mean, if I incur the additional cost in a conformance level. Okay. So what is my impact on a non-conformance, that we need to compare.
Sir, if both the situation has high situation, the conference this cost is also high, and even the non-conformance cost is also high, then we have to remove the product base, or what should be
No,
that?
then what is if the conformance cost is high and still you cannot reduce the non-conformance cost, okay? So what is the point to incur the expenses in conformance? See what happened, I tell you something. Some product which is basically the weather sensitive product. Okay, so even though you check, I mean, like the product quality and everything, but just when the final product come in contact with the external weather, you cannot guarantee the performance. Okay, then you need to again rework on it. Okay, so if it is required, then why you are going to test or why you are going to incur the cost on a conformance level? Generally when you are manufacturing a customized machine, okay, so it is always you need to test with the end product. So initially on the basis of the requirement, people are not, or the management is not willing to incur an expenses on conformance, if this is the situation. Okay, whenever you are going to increase the cost in a conformance at conformance level, you need to make sure there is a slight saving on a non-conformance level. Then and only then makes sense. Otherwise, it makes no sense. Anyhow, see what happened when you are buying a product. If you are buying from a reputed vendor, so at his level, he also tested. So again, retesting is not a solution. So that's why you need to evaluate. Means if you are spend time on a conformance cost or spend resources on a conformance cost, does it give a benefit to reduce the non-conformance cost?
Yes, sir, but in IT sectors where they have some app developments, they do various trials and errors. Though they have the non-conformance, the conformance cost is very high, still there will be some internal failure.
Correct. See what happened. I mean, if I take the example of
There
the
will be some external factors that is also increased.
yeah, correct. But see, sometime what happened in the organization as well, the lacuna at one department level may counter or may protected by at other department level. So it makes no sense to you need to correct the process on a single department level. You need to always evaluate it on the basis of the organization level. Okay, so same way in IT, even if I consider in a IT sector, if they cannot reduce by increasing the cost of conformance, okay, so what is the meaning to spend the additional amount on a conformance? See what happened, how we are going to consider here. Earlier means in this example there is a two situation, means the earlier manager how is handled it and the like the successor manager how is going to handle it. Okay, so there is a conformance cost and this is non-conformance cost. Okay, so in that situation what happened, if you spend say for 2000 US dollar, okay, and here you are going to spend the 5000 US dollar. Okay, now when the new manager came, he implement some program, and because of that reason the cost here is $3000, and here also it is a $3000, then makes sense because here total is a $7000 and here total is $6000, so makes sense. Okay, but in spite of increasing the cost here, this cost is as it is. Does it make sense to incur the additional expenses on a conformance cost? Okay, so whenever you are comparing the conformance and non-conformance cost, okay, you need to make sure because of additional expenses on conformance cost, it helped me to save the non-conformance cost. So here if you see the production downtime reduced by 90%, that means we are able to save some non-conformance cost. Okay, scrap cost, reduce the scrap cost by 50%, that is also we are able to save the non-conformance cost. Okay, there is no loss of the customer, so that is also help to save the non-conformance cost. So in this scenario, if we increase the level of conformance cost, it is acceptable. Okay. Okay, any doubt here? So in business, you need to evaluate like this. It is not even in with regard to the internal control, you need to implement the internal control if you are able to generate the saving. Just because it is given in the books, then don't implement the internal control like this. Okay, so like next session we will start tomorrow morning. Any doubt here? So if no one has any doubt, then I'll I can close the class. Okay, so bye everyone. Good night.
Thank you, sir.
Yeah, thank you. Bye.